people think of 2008, they think the Great Recession caused by housing crash. So recession is correlated, associated with housing prices going down. But you take 4 out of the last 6 recessions, home prices went up. We don't have the toxic debt. We don't have ninja loans. We don't have adjustable rate mortgages. We don't have all the things that made housing prices associated with the recession. So the most likely thing is that if a recession actually happens, in this recession, home values would go up.
It looks like the Bank of Japan has come to the rescue, and we have now averted the Great Recession 2.0. I don't know about a lot of you, but when I saw the market down 1,000 points, I immediately flashed back to sitting on my couch after Bear Stearns collapsed and was like, oh no, this is different. This is going to be bad. I remember having those thoughts Monday as I watched the market go from 500 to 600 to 700 to 800 to 1,000 points down. I was like, this is not going to be good. Matt, do you remember those days?
I do. I remember them well. I saw it and I was like, awesome. I love this. It's fantastic. I literally was just like, this is the best, because I'm in a completely different position now. You know, you and I 20 years ago, or 15 years ago, we were in tech. Or 17 years ago, we were in tech. And so when we saw that market doing that, it was like, oh no, we have a 2000 all over again.
Right.
And we just watched money and markets just evaporate. You know, thankfully, I mean, I posted on somebody where they were just like, oh my gosh, this is horrible. I was like, I know, I woke up this morning and my rents were all down 8%. And I was like, oh wait, that's not what happened. But I think the cool thing is though, is that, you know, where we're different from Japan is that Japan's economy is not nearly as resilient.
Mm-hmm.
And so they needed all that help. I mean, you got to remember, they've had a dead 3 decades.
Yeah.
You know, they've had a dead 3 decades. If everyone remembers, in the early 80s, every single movie was about how the Japanese were coming in and taking over every one of our American companies because they had the right management style. Mm-hmm. The problem is it got too heavy debt laden, and guess what happened? There you go. And so then all of a sudden, Japan was no longer the conversation. And over a 5-year span, it was the only conversation. And then after that, it was nothing, non-existent. And so they've been in the last 3 years of a dead decades of growth. No growth.
It was really wild, because again, I really did think when I saw Monday morning, right, when I'm up early, right? So I was up pre-market, it was down, I don't know, 600-700 points. I'm like, oh, this is weird.
It's awesome.
And then you come out and like 2 days later, you have Bank of Japan going, oh, sorry, guys. Sorry. Didn't mean to start unwinding the largest carry trade on record. So it does feel like the genie's been at least put back in the bottle for a little bit. It'll be really interesting to see if how long Bank of Japan can wait, because they have an economy that's not doing well, and they have inflation rising, and eventually they're going to have to take care of their people. But it does seem like the Bank of Japan canceled the liquidation event, which occurred over the weekend and Monday. Dion, do you remember the Great Recession? Did Bear Stearns go and belly up even hit your radar back then?
That's what I was thinking. First is I don't want to steal Matt's thunder, but you're right. This reminds me of the time all our property values dropped 5% in a weekend. Right? Not happened.
No.
Rents have not gone down market wide, right? So, and then look at the timing. 2 weeks ago, Patrick Bet-David comes out with a video talking about how stocks have appreciated more consistently, 10% every year, better than real estate, which is on average 5% every year. So I made a reaction video and I was like, yeah, as long as you ignore cash flow, levered appreciation,
yep,
the benefits of depreciation, right? And then you go a week later, because all the haters that came in my comments talking about how I don't understand stocks. You're right. I don't want to. This can happen. And so the less a person makes declarative statements, the less apt they are to look foolish in retrospect, but I'm going to make one. I don't think I've ever experienced a stock market crash. I'm a little older than both of you, and you guys have experienced several, right?
We have. Well, a couple that mattered.
I've often been too poor to care.
Yeah.
Like, oh, look at all those rich people losing their money. Who cares?
Right.
And now retired completely, fully, 100%. I don't own a stock. I don't have a penny in a retirement account. 100% in real estate, diversified in 2 specific ways. When a stock market crash happens, I'm going to look for the opportunity. Where's the pain going to hit? What options do I have now that I didn't have when I didn't have assets? And this came up yesterday in the conversation during the live was, who would you rather be? Would you like to have $20 million in real estate with $20 million in debt, or zero real estate and zero debt? Because the option going forward with how appreciation works, with how inflation-based debt destruction works, the person with the real estate in a couple of years is going to have all of these options, even if they have basically the same net worth starting out.
Correct.
Yeah.
I made a post and I wanted to be as transparent as possible. I don't like stock market crash. I don't like seeing people lose money. But what I'm hoping is I am not stock educated. So I would hope people would do their research if that's the asset class that you invest in. So with a little bit that I know, don't panic sell. This is dollar cost averaging. You continue to invest the exact same amount you were before. You're just going to buy more stocks because they now cost less, but you don't sell because that's when you lock in your losses.
Yeah, love all of that. So Matt, you and I really have experienced two epic crashes, the dot-com crash, which started early in our careers.
Yep.
No less painful, at
Nope.
least on a percentage basis.
Yes.
Then the Great Recession and the real estate crash. When I go back to the dot-com crash, it fundamentally changed our financial future because we had just filed our S1, which is the start of going public. And I was at a small software company. I was like employee 13 or 14 or something. And it was looking like a 7, maybe 8-figure exit.
I was going to say pictures of stacks dancing in your heads.
Yes. I mean, what's the S1? Yeah. I mean, yeah. I still remember the celebration when the S1 was filed.
Yeah. Sure.
So it's going to be a 7 or 8-figure thing. Then the dot-com event happens. Then 9/11 happens.
Yes.
And we were sold for parts, pennies.
Yeah.
I think I got 37 cents or something for my options where I thought they'd be worth, $20 or something. Like 6 months later, it can be that traumatic. And not to mention, my 200 grand turning into 40 grand, seemingly overnight.
I was grateful for the crash.
Yeah, I am now in hindsight. I
Yeah.
mean, I've told the story so many times. And the reason I'm bringing it up here is I think Monday's event may cause folks like you and I 25 years ago, whatever it was, to go, you know what? This casino is too stupid.
Correct.
I'm going to take my chips off the table and go find a hard asset, AKA 4 rental properties. What do you think, Matt?
Right. No, that's exactly right. I mean, I was grateful for that because I watched my portfolio go from, I think it's either $27,000 or $32,000. I watched it go to $900 and something dollars.
Ouch.
900 and something. So percentage losses, I was the king of that. I had almost all 4 stocks that I was in go to zero. And so what was awesome about that though, was I recognized that it was what it was. It was a casino. It was a gamble. And so that completely changed my way of thinking. My mom was a real estate broker. And so as a single mom, she would have to take us on those showings. So I was just ecstatic when I turned 12 years old. And I was like, I cannot go to these things anymore. I cannot listen to any more drivel. Like I need to not go on these things. And so then I was at home. And the funny thing is that's what I returned back to after I lost basically everything. I was really proud of myself. I was, 20 years old, right around there, 22, when the dot-bomb happened. So I was right around that age. I'd saved up that much money. I'd saved up, 30 something $1,000 and put it in the stock market. And there's not many kids that are that age that did that. I did that. And then I watched it evaporate through no fault of my own. And the best part is 2 of the 4 that evaporated were based on fraudulent filings.
Yeah.
Well, good. I can join some class action lawsuit and get 9 cents, because the attorneys are going to get it all. So for me, I'm grateful for that. I'm grateful for that horrible thing that happened in my life because it put me on it made me go explore more, get on a different trajectory. And then that's when I realized, hey, I need something that's a physical asset that just inherently grows with inflation.
Yeah.
But also something that brings me income over time, because as much as I love working 100 hours a week, I know that I'm not going to be young forever and I don't want to do that forever.
Yeah. What's really interesting is I do think, Monday I was having flashbacks to the Great Recession or the dot-com crisis, just watching the market literally melt down. It was
Yeah.
wild to watch on my
Unreal.
phone. It was wild. And now it's like, oh, we're okay. We're good. Bank of Japan, genie bottle, done. But really where I go from this is I don't think a recession is canceled. I think a great recession repeat is canceled because you could have PTSD Monday and think we're going back there. But I think most people are wrong about the recession because it's not an all or nothing, right? The dot-com off a cliff, the Great Recession off a cliff. And I think what we're suffering through is a rolling recession. It's an economy that got shoved $8 or $9 trillion years ago. And that's just working its way through the system. And you're going to have fits and starts in different parts of the economy. So this recession, statistically speaking, will probably go down as a shallow recession, but it actually, in hindsight, might be a really, really long recession.
Right.
It could be years theoretically.
Yes, I agree.
And again, it would be backdated. It could be backdated till October, which Danielle DiMartino Booth thinks is when the recession happened. I think it'll be June or July, but either way, I think this is a shallow but potentially very long recession. But that's actually a huge opportunity.
Agreed.
When I look at a rolling recession, it's much slower moving. You can identify what segments are hurting and which aren't. And for me, again, to our whole conversation, I'm a 98% real estate guy versus 100. I'm going to do the work. We're all doing the work to find the next thing and helping people. I think a rolling recession is going to help the ORaaT community immensely because we're going to find great deals. We're going to follow up. We're going to get creative. And our community, I think our community explodes because people are going to just see that, there's a casino over here. I don't know the rules. I'm not a cool kid. Let me go over here and see what this whole do the work thing is. What do you think, Dion?
So I think we've come up with a possible topic for a future video. Tragedies we're grateful for.
Yes.
All right.
And then I think with the recession, one of the biggest mistakes people are going to make is because of the FUD, right? Fear, uncertainty, and doubt is going to make people think, okay, they keep talking about a recession since 2022. They changed definitions of recessions or clarified definitions to say, don't get mad at our current president. It's not their fault. This is a new definition we're going to go with. Unemployment is amazing. The economy is doing great because stock have such great value. You mean you've devalued the dollar so much it takes more currency to buy the stocks, so they cost more, right? And so people are going to think there's a recession coming. I'll wait to buy. Because we have short memories. People think of 2008. They think the Great Recession caused by housing crash. So recession is associated with housing prices going down. But you take 4 out of the last 6 recessions, home prices went up. We don't have the toxic debt. We don't have ninja loans. We don't have adjustable rate mortgages. We don't have all the things that made housing prices associated with the recession. So the most likely thing is that if a recession actually happens, in this recession, home values would go up.
No, you're absolutely right. And again, most people don't study history. Most people don't study economic history. The only rolling recession in the last 50 years that I can find is 1991. And 1991, some people call it the soft landing, right? Because the Fed was able to either via luck, probably just luck, was able to kind of cut rates into that and not actually have, the off a cliff recession. But it was a rolling recession where different parts of the economy were impacted and came out of it at different times. And it feels different. And to your point, Dion, if you're, say, I don't know, 38, 40 years or younger, all you have is the Great Recession, right? If you're our age, you have the Great Recession and the dot-com crash. Both of those were epic events where it was just off a cliff. So we all have that kind of PTSD. And I'm pretty convinced that this recession's not going to be that. And it's going to catch everybody off guard. And you're going to be waiting for something that doesn't occur, right? If you're going to wait for this recession to have home prices crash 50%, you're misguided. It's, it's haven't we learned that the tools and the willingness of banks, if something happened, is different than last time? I mean, Matt, you saw it last time. How fast did they have those forbearance websites up this time?
Yeah, very
It's
fast.
crazy.
Yeah. And that's the kick the can down the road model. I think what I see is, and again, I actually had an argument with a president of a bank yesterday.
Uh-oh.
And I said, "Oh no, it's good. Like, you know how I argue. I mean, sometimes
Yeah.
I get mean, but the funny thing is having that argument with him, I just said, you think you know what's coming. You don't, because you're looking at spreadsheets. I'm in the real world talking to tenants, looking at credit, talking to those tenants about their credit. I look at their job. I look at the fact that they didn't get a raise. I'm seeing all of those things that are showing up on documents and paperwork that executives and presidents of bank look at 60 to 90 days after I've already said that it was going to happen. So
Right.
I told them last year, I told them a year and a half ago, I said, you watch, rates are not going to be in the 4s or in the low mid 4s. I said, they're going to be in the 7s. I actually said that to the president, and he actually said to me, he's like, that's not what any of the paperwork looks like. That's not what the Fed's projecting. That's not what anybody's projecting. I said, I guarantee you I'm right and you're wrong. And he wasn't the president of the bank at that time, but now he is. And so I said to him, I said, I was right. Any way you want to slice it, I was right. And now capital's a lot more expensive. And there was debt that I didn't refi because I listened to him. I made that mistake. I didn't refi it. I was just like, nah, all right, you know what? You're the banker. You've been doing this for 30 years. You know better than I do. I need to trust that. I need to not be such a control freak, and I need to trust that. I should not have trusted that.
Whoops.
But now these banks, they are all calling for deposits. They all see a massive outflow of deposits. They're borrowing money at 5.2 and 5.4%, and they're putting it on the street at 7.5, but they're having to pay 5.2 on a CD.
Yeah.
And so these banks are getting absolutely strangled by my 30-year fixed rate debt at 4% and your 30-year fixed rate debt at 4%. They're getting, and at 3, we are strangling them. We are, because they look at it and they're like, I'm borrowing money at 1.5 higher than what I gave it out. And I'm like, maybe I should introduce you to the concept of hedging. This is what we do here. And so I think it's amazing because all of these banks are absolutely tightening. They're all tightening. They've all raised their credit standards. They've all raised their loan to value standards across the board. 4 different banks in my area. It has all changed. And so somebody I had lunch with, a VP at a bank, and they say, I said, okay, so what's your rate today if I call you today? He goes, 8.2.
Oh, wow.
I was like, what, do you hate me?
What did I do to you?
Am I dating your wife and I just don't know it? What happened?
8.2.
8.2. And I said, let me tell you, you are so far from reality. He goes, well, Matt, we need that spread. And I go, then you're not going to be lending.
Yeah, exactly.
You're the worst on the board. You're not going to be lending. I'm here to tell you. And he goes, well, we would consider working something out with you. I go, when we start working something out, we're starting at 6.9 and we're working our way down from there. We're not starting at 8.2 because you're going to think you gave me 1.2 and you gave me nothing. You gave me market. You gave me your inflated price. So the thing that people need to be watching out for is you better have your DTI right. You better have cash. You better have a stack of cash that you're socking away. Delay those projects that you think you need to do. Delay them. Now is not the time. Contractors are still busy, although my phone's ringing more than it has been in the last month. It's rang more than it has in the last 6 months. And that 6 months, it rang more than it did in the last 2.5 years.
Right.
So be prepared, get cash, improve your DTI, make sure you have solid credit, and you will be in a position to be the best option for the bank, not a great option, but just the best option for the bank when you come to get, some money in the next 6 to 12 months. That's my idea.
Yeah. One of the things that's important for me, for people to hear and feel is if I'm right about a rolling recession and it being shallower but longer than averages, which is what you would expect from a rolling recession, you've got to be in the right rooms and around the right people, right? There's 2 things I want to talk about here. One of them is the school community, one rental at a time. We're now over 210 members. You 2 are both a part of it. And I'm just watching that community now that we tripped over 200 start to share and communicate. I used to have to poke it to get people to share and comment, and now it's really taking on a life of its own, which I'm so grateful for. But you've got to be you've got to be around other people doing the work, so you don't you don't unsee things, or you don't convince yourself of stuff. You got to be in the right rooms, right, Dion?
Absolutely. And I have a question. First, I'll make a Dionism statement, right? We talk about if you don't study history, you're doomed to repeat it.
Mm-hmm.
If you do study history, you're doomed to repeat it because no one else did. But so when it comes to a recession, here's where my concern goes. And be vague if you need to, but Mike, with your current rents, you're at probably 95% rent collection. You have a few empty units or turnovers going on because you have such a big portfolio, right? When I have one, it's like a recognizable percentage of the portfolio.
Mm-hmm.
How much of your rents would have to stop coming in before you would have an income problem? Like what, 10%, 50%, 30%?
No, 40%, 35,
40%. Okay.
40%.
And Matt, same question.
Yeah,
How much of
that.
your rents would have to stop coming in for you to have a money problem?
A cash flow problem, 40, 45, maybe 50%. So 40 to 50%, a cash flow problem. But then thankfully we've got bands, Zoob's got bands. We got bands waiting to be deployed, that if that's where it needs to be deployed to, it can be deployed there.
Right. I mean, that's not even counting your reserves, right? You're
That's what I'm saying. Yeah,
just talking with cash flow problem. So I'm probably about the right at 40%. I'd get concerned. At 50%, I think 50% is my heart. Okay, now I've actually got to get a job or something stupid, right?
No, you know what you would do?
Watching.
You know what you would do? And this is, I mean, if it got, let's just play this out. Let's say it got that. Let's say it was 50%. What would I do? And I'm going to guess Dion would do the similar thing. You and I, Dion, and I think Matt may have one as well, but I own some stuff free and clear.
Mhm.
After the Great Recession, one thing I told myself is I'm going to have an oh shit pile, right? I'm going to have a pile of assets that are owned free and clear, that if the world comes to an end, I can sell those, fire sell those, and raise capital to save the empire. So yes, we got bands and we could probably trickle through for, 6 months or whatever that is. But if it got that crazy, dude, there's 10, 15, 20 houses. I go, all right, well, let's go raise multiple seven figures. That's what I would do.
So why don't you why don't you take some of those off the table now? Like that's what I'm doing. I'm taking some of those off the table right now because I believe. So Dion's the up guy, you're the flat guy, and I'm the down guy, right?
Yep. Mm-hmm.
So I believe because at best it's going to be flat or down at best.
Okay.
I want to do it while days on market are still relatively short, while there's still a good amount because we have Siberia here, and October 1st, everybody gets that 35-degree day and the world stops, even though we live here. And so
every year,
like this is like, I've played this game for years. Like I buy motorcycles when there's a foot of snow on the ground, and I buy trucks when it's springtime, because everybody's finished their plowing season. So there's that cyclicality to it. So what I would say is, for me, because I believe in flat or down, I don't think it gets any better from here. So I'm taking action on what I believe, my beliefs, which is what
I love that.
Which is why we hate the Crash Bros. That's why we hate them. We hate them because they don't follow what they're saying. I think it's going to crash 30%. I'm shopping for a house. Which is it, dude? If you think it's going down 30%, why are you shopping for a house, you jackass? And so that's what I look at for me is right now I've sold one. I've got another one under agreement, and I'm putting another one on the market this week. And so that cash stack that you're talking about, I totally agree with that concept. Most people don't have that big of a portfolio. And even if they have one, it's not all the way paid off. It's still got somewhat of a mortgage on it. But I think now's that time. I don't think, for me, it's not too early for me to say, I want to take some chips off the table now where I believe it's at its peak or close to its peak. And I'm blessed because I just got a nice little 50%, 50-point reduction in rates. So now I can go out there more bold with the number that I did, and somebody's probably going to buy it in the next week.
Well, I'll tell you exactly why, because and I think I put this on my channel multiple times. It's funny to say this, but I believe I'm going to repeat exactly what I did in my book, One Rental at a Time. And I think it occurs next year or the year after. Now, what is that? I think because of some external focus from likely the government, federal government, there's going to be an increase in lower end home values. Right. Again, I'm the flat guy, right? Because of the mix, but I think we're going to have some first time home buyer programs come out likely in a big way. And my entry level housing is going to see a bump of somewhere between 10 and 15%. That is going to happen to correlate beautifully with what I see happening in the commercial real estate market exploding. And I'm going to 1031 versus raise cash. And that's why. And it just every day it feels like that's getting closer and closer.
So I only have two, but you both have a few paid off properties. You have options. That's the thing. The asset owner has options.
Mhm.
That person that only has a paycheck, how many
Yeah.
paychecks can they miss before they have a money problem?
3.
Most people,
that's the
yeah.
3
Most
if
people,
they're lucky.
yeah.
You're right. The concern with the recession isn't for the asset owners.
Yeah. Well, and that's where I think that delinquencies are going to go up without a doubt. I've already seen it a little bit. Vacancy isn't. I'm still at, 0.6 or something vacancy rate. It's infinitesimal, but I think the delinquencies are going to continue to go up. And that's fine. I mean, it is what it is. But this year we're back to kind of normal. We've done 2 evictions this year, and it's, August.
Oh, wow.
So
That's not bad.
no, no. I mean, it returned once I got rid of all the ORaaT tenants. They got a bunch of free money for breathing. Once I
Mhm.
got rid of all those and cycled through all of them, which last year it was 9 or 10.
Mm.
But this year it was funny because some of that carryover was to this year. So of those 3 that I did, 2 of them were remaining ORaaT tenants. So now I've gotten all of that flush through the system like food poisoning. And I had one legitimate toss. And we've gone through, we bindered strategy 8 people in July, and all 8 people paid the higher rate in August. And in some cases it went from 1,100 to 1,500 or 1,600. So they were
Wow.
sizable. So I think that that's what's going to continue to unfold in this market. And now yesterday I was getting a little bit giddy because I thought I was going to see that acceleration that was going to make you guys give me a buck. And then the stupid economy saved itself, jackasses, with all these trillions of dollars on the sidelines. But there's still hope that there's another couple of those coming. So we'll see.
Dude, you're
So
running out of daylight.
I am. Oh, I totally agree with you. Without a doubt. Without a doubt. Fat guy running as fast downhill as I possibly can. Totally get it.
the other thing that we have going on with the recession is it's harder to buy a house, right? People
Yeah.
feel uncertain about incomes. Interest rates are
Yeah.
high, prices are high. So
Yep.
what we have is I have a life lesson that I learned in the last, not fairly recently. I had a young couple renting. And for a couple of years, I've been telling them you shouldn't be renting, you should be buying, you should be on the property ladder. Finally got them with the agent and a lender, and they buy a house, they move out. Couldn't get them into a duplex, but they got a house. So I have a tenant turnover at a property. And I took Matt's course, and I took the part of your course where it's how do you market a property. And you also helped me do Chesla's that one time. We had some interest, but then you blew it up. I have to, no dig on your course. I have to not do that going forward, because there is so much demand for the rentals, and then you do a good listing.
Yeah.
I couldn't keep the emails straight. I use Hemling, so it comes from different sources. So I couldn't keep the source straight.
Yeah.
Too
and
much
then
demand. Oh my gosh.
Heard it here, folks. I create too much demand for your asset. Bad
Right.
idea.
So I got the place rented, and it was a significant increase. I got area average rent. So it's not always bad when the tenant moves out.
Agreed.
It's bad for the tenants. There's just not enough rental units available, and the prices are going up. So when it becomes harder to buy a home, you have people say, well, I don't want to buy a rental now. Prices are high, interest rates are high. And I'm like, yeah, but I want to own a rental now.
Heck yeah.
Yeah. So again, I think one of the things that I'm trying to communicate here is, and again, it's on my 7 rules, right? You got to network. You got to meet 2 new people a week. And one of the best ways to do that is to get into a community like our school community that has 200 people you can meet, right? There's 2 accountability groups. Frank runs one tonight, Wednesday, and I think Jared runs one on Sunday. We have, different education. You want seller financing? Great. We got Ty, 30-year veteran, 6-hour masterclass. You want a handhold through a 10-week boot camp? Great. I gave you my $1,000 boot camp for free for joining. But folks, don't be a wallflower. If you join, introduce yourself. The community, if you poke the community will support you. And then join the accountability calls and just hold yourself accountable. If I'm right about a long and shallow recession, This is the time where doing the work pays off.
Mhm.
And then let's switch gears and talk about our Vegas event.
Mhm.
With the Vegas event, tickets are on sale now. They've been on sale for a couple of weeks. I think we've sold 50 already. I think we're going to max out the facility at 450 this time.
Wow.
You
Awesome.
guys are going to be there as many of our millionaires were. But why don't we talk about just how important it was to get in the community in real life and to meet people in real life? Because I'd love this event to sell out in the next 30 to 45 days. Dion, we'll start with you. What did you think of the event, and who should be buying the tickets now?
Well, I would buy them quick because that sellout, we got kind of lucky last time. And this is not to attack you. You didn't understand the venue, and you're like, okay, we're gonna book it, and we booked it, and there's some expansion room. There's some
Right.
Now you know what the expansion room is.
Yeah, there's no
sellout
space.
this time is sold out when it
Yes.
sells out. I really like the idea of the name tags with people's YouTube names on it, because we all know each other. We all see each other in the chat all the time, but we know wealth building journey. Right. We don't know. I'm going to ask a million questions. That should be like on the name tag. That those two go together, right? You have to put all that together with it actually on the name tag. Getting around the other people that are doing this and see and again, no insult. We're all average.
Yeah,
and most
there's
of the people
nothing
that are
special.
average, but they're not going to have an average life, because once you reach financial freedom and you make that job optional, all of the options that open up. I'm looking forward to. I'm hoping that since my burr is done, I'll be flying from Thailand to Vegas for
Nice.
so I'll be doing the same thing where I get there a week early. We'll be doing the midnight Denny's meetups and it'll be the 1 week of the year I'm allowed to be tired in retirement is the Vegas event. So I'm super excited about it. And I am ready for people to come and say hi, to get those videos recorded for the one rental at a time impact videos that we'll be making at the event.
I love that. I love that. Matt, you and your wife are going to kick it off. I'm always going to start the event with a couple. Jason and Jen crushed it last year. First thing you told me right at the tail end of the event is you wanted to do that with your wife, and you're going to be up first, man.
I'm excited for it. I mean, Ashley's excited for it. I think that it's cool because she has no outside face to the business, largely speaking. And so she can identify, and it's not with necessarily everybody's wife, but she can identify with the person in the partnership that is basically just behind the scenes and does the ugly work. Taking care of the bills and taking care of, hey, babe, we got this insurance thing coming up. And, she's the one who takes care of a lot of that stuff. That's like 75% her, 25% me. And then I'm 100%, kind of, I'm the only one that talks to the banks. I'm the only one that talks to the contractors and et cetera, et cetera. So I think what's really going to be cool about that is if you have a spouse that is on the fence, you are losing your life opportunity to get them to speak with somebody that is that person. My wife, when we got married, I said on our second date, I said, hey, listen, just so you know, this is a deal breaker for me. Here's my deal breaker. I invest in real estate, and it's a lot of work, and it's going to mean we're broke for a while. But I knew right away that she was the one that I wanted to marry, and that she was the one I was going to marry. Just had to close the deal. And I also knew that was nothing that her family had any idea how to do. They were all a bunch of clock punchers. And so it had to, that mindset shift, that embracing of what it was, that level of trust that she had to have. She's going to be able to walk people through all of that stuff, because we were broke as a joke, dollar menuing treat once a week if we were lucky. That was our life. And so if you have a spouse that is even slightly on the fence and even slightly apprehensive, being able to talk and see somebody like my wife, like Ashley, and be able to talk through that stuff and how she got through it. She is the most conservative person you'll ever meet. And she's the nicest person you'll ever meet. So she shouldn't be a landlord. And that's where I come in. So you have to recognize,
you're the heavy. Yeah.
You have, well, always, you have to recognize that you both have different giftings, and it's your job to help them activate those things to help accomplish the goal. Because it sure is a lot of fun doing it together.
Yeah, I think having couples go up on stage are so important, because there are so many folks, going
doing it alone.
Doing it alone. That I'm actually going to have a couple. This is the first time I'm announcing this. Day 2 will also open with a couple. It's going to be the wonderful Jeff and Soleka. will be opening it up. I think they're on their 8th
Awesome.
house hack or something of
That's
that nature. So again, I believe couples need to come. I believe the other thing I learned from the last event is all my speakers stay for the entire event. So you'll have plenty of networking opportunities. I'm also going to up my game as a host. I'm going to be feeding everyone, both general admission and VIP. I'm going to be providing 6 hours of networking, 2 lunches and 1 dinner. And because I know not only the presentations are valuable, but sitting at different tables and meeting new people and bouncing around was also extremely valuable. So I am so excited for the event. Folks, you need to buy your tickets today. I think VIP probably sells out because we're already about halfway out of VIP. General admission, obviously a lot more tickets. We still have a fair amount there, but yeah, that's just a taste of what's coming. I got some outside folks that have been on the channel but not regulars. Anna Kelly, just before anybody asked, is invited. The deal with Anna Kelly and her kids is she's got to make sure her kids don't have anything big that weekend.
Sure.
And then she'll be there. So we won't know about Anna probably until January. But I'm excited for the event. But and I'm excited for school. I'm excited for a rolling recession because it's finally going to show that doing the work matters. The last 3 or 4 years have been a weird real estate market. And I think the next 2 to 3 years are going to be kind of boring, but beautiful, right? I think a lot of people are used to this and it's going to be this, but you make your money like this, right? Everybody's not doing anything, but you find and create opportunities. So I hope to see you guys inside school, and I hope you buy your tickets to the Vegas event. Dion, where can they find you?
You can find me right here on YouTube, Dion Talk Financial Freedom, or soon on the Coach Carson channel, because I'm doing an interview today
Awesome.
on the benefits of an LLC.
Oh, fireworks. Fireworks tease.
No
That's a
idea
tease.
what's coming.
No idea what's coming. Matt, where can they find you?
Lumberjack Landlord, YouTube and Instagram, and here every Wednesday now at 11 a.m.
There you go. Thanks, guys.
Thanks, guys.
Yeah.